Once execution is understood, the next step is learning how to read the market itself. Entries based on liquidity only make sense when you can interpret what price and volume are communicating together.
I'm going to talk a little bit about Richard Wyckoff. And I know many people say that volume doesn't work, but volume, especially in the stock market, is a great, great edge. And if I have the discipline in the stock market to wait for volume coming to the party, I can get my hit rate up to 80% when volume hits me between the eyes. So Richard Wyckoff died in 1934. His work was carried on by many, many people. I bought his original course in the early 1980s, and I went through it. And please do not buy Wyckoff's works and his course unless you're prepared to put a great deal of effort into it. I'm not saying you won't do that, but it's certainly not something that you're going to take in on a Sunday afternoon while you're putting back 3 or 4 Frosties, okay? That's not going to work. He writes in the, like the King James's version of the Bible, it's all these and thys, really, really difficult going as Gann did. So his 3 laws, supply and demand, cause and effect, effort and result. So the price action on the chart must reflect the volume action below it. If the volume demand is large and the price move is large, then price is acting rationally. If they don't, then that in Wyckoff terminology is known as a non-validation. And that's a leading indicator and an opportunity for profit. So, for example, a large change in price and low volume. So you get a breakout on low volume, then that's a non-validation. And markets on any time frame, rising and falling volume, need to be carefully watched. And all of this came from the old fellas, Livermore, Wyckoff, and a whole host of traders of that era just reading the tape. The only thing that was on the tape was price and volume. So what Wyckoff tried to do in his chart reading and his course was to try and give the retail trader the ability and the education to be able to read the tape in terms of price and volume. And I love the Wyckoff stuff, I really do. And it's a complicated theory. In the stock market, there's a gentleman called Stanley Weinstein that's written quite a few books on the longer term aspects of the Wyckoff technique.
What David Paul just explained introduces one of the most important shifts a trader can make. Instead of relying on indicators or fixed formulas, Wyckoff focused on understanding the relationship between price and volume.